Welcome to Mission Better. What's the mission? Better mission. We're leaving people better, connecting you with wisdom from people who have done it and who made the hard decisions. Connecting people to the passion and the mission to the vision.
Hello and welcome to another episode of the Mission Better podcast. I am your host, Kristian Garfield, and as always, our mission is to leave you better than we found you. Today I have an excellent guest. He's one of my favorites. This is actually the second podcast we're going to record. The first one we recorded right before the election and we didn't have enough time to put it out, but now with the changing landscape here in Canada, since we recorded that one, so much has changed in our own personal lives, in our overall mission, what we're doing behind the scenes. So I figured what better thing to do than get Daniel back in a new setting, in the new studio, make sure that we get the right information to the people who need it. So without further ado, I introduce to you Daniel Char, the power broker.
Hey, how you doing?
Oh, buddy, it's always good to see you.
See you.
So doing a little bit of golfing before you came in today. How was your round?
It was good. I golfed with one of my lawyers and a friend of mine and a client, and had a great time.
Awesome.
And I had the gym at 7:30 in the morning. So 7:30 to 8:30 was gym, heavy lifting, and then after that, rushed to the golf course.
Nice.
After the golf course, it was straight here.
Nice.
And then we have our team meeting right after that.
Hurry up and wait. So can you do me a favor? Give everyone like a 1 to 2 minute rundown as to who you are, your background, and what information we're going to be bringing to the people here.
Absolutely. Daniel Char, love heavy metal music, horror movies. That's me personally. I started my career in banking, worked at Scotiabank for 8 years, started as a teller, moved up to becoming a senior financial advisor, then became a mortgage agent. Spent a few years in that role and then became a mortgage broker. And then recently, I think it was last year. Yeah. Holy smokes. A year flew by. I opened up my own business, mortgage business. It's called Metal Mortgage. So blends my passion of heavy metal music and real money, which is gold.
Yes.
That's why I got that subliminal messaging in there.
Right. Now, one of the things that I like about you, now you and I, weirdly enough, we're both here in Toronto, but we met in Florida at a boot camp trying to learn how to make more money, run a business, do all the things that we were trying to do. And we got connected just at random, and I gave you a song. I've actually made you a song, which at the end of the podcast, if you care enough to listen through this thing, we're going to play the song at the end so you can jam out and get brainwashed into how to make money using Daniel Char, whether you use his services or not. But if you're in the market for a new home, if you're looking to remortgage, if you need to renovate, if there's anything that you need to do, this gentleman is one of the best, if not the best in Toronto at getting deals done that nobody else can get done without doing it fraudulently. So at the end of this thing, the deal doesn't unwind on the day of closing like it happens a lot. In fact, his specialty is unscrewing deals that get thrown upon him when nobody else can get it done. So
I like how you added that part.
Right?
Yeah, we only do clean deals. And they start off very messy,
right?
But the way we do things is all clean. It's always above board, and we get asked a lot of crazy stuff.
Oh, yes.
Yeah, right? So
now, one of the things that you may or may not know is like 4 years ago, when I decided to help open up the company Consumer Direct Windows, I was supposed to go and work with Daniel and get my mortgage license and start becoming a broker. But ultimately, I chose to do that route so that I could help grow a window company, help more people rely on a source of income that wasn't dependent on me having to spend more money in order to get licensed, but also puts me in a position where I'm in 5 houses a day. But I've now recently joined the team. I'm in the process of getting my broker's license. So thank you for allowing me on board the team still, right?
My pleasure. Welcome aboard. You're going to be a really great asset. You're going to do very well.
I'm looking forward to it. Now, part of the reason that I wanted to bring you in here is we're now post-election. We talked a lot about how it should have went down. It obviously didn't go down that way. We've essentially just plugged in another puppet into the system. So let's just start there. At the end of this thing, we want to make sure that we're getting the right information to the people. There's people saying that the market is down. We're seeing some rate drops. We're seeing all kinds of different things happening, different narratives play out. I literally just talked to somebody today about like their business is high rise. Now, they're their business has kind of just went on a downward. They said there's like a glimmer that it's going to go back up again, but right now everything's on a downward trend as far as like condos, apartments, that sort of thing. What are you seeing in the housing market with the new Canadian economy and all the things that are going down? And what should people be looking out for right now? Where's the big plays? I know there's a lot of questions in there, but
Well, it really depends, right? Because if we look at there's a Canadian market and then there's the real estate market,
right,
and those two are sometimes interrelated and sometimes they're completely separate, and I'll explain why. Why a lot of people think, well, if we just start shipping 1 million immigrants into Canada, that's going to automatically create demand, right?
Mm-hmm.
And because you got more people. In theory, yes, but it really depends on who you bring in, okay? Because if you bring in 1 million people into our country, yes, that's going to create demand in the overall GDP because these people need to buy food and they got to live and all that stuff, right? So they're going to move money around here and there. And everybody still needs a place to live, right? But it depends who you bring in. Because if you're bringing people in that have money, they're going to be studying in our schools. They're going to be paying 3 times the tuition cost that our residents pay. So let's say tuition is $20,000. They're going to pay $60,000, right? So that actually benefits us. And they're going to pay for rent. They're going to pay for food. That really helps our economy. What doesn't help our economy is when we bring in 1 million refugees that are dependent on our taxpayers' money, where we house them, we take care of their health care, and we subsidize their living expenses. Because now you're actually taking away from the Canadian economy, right? So yes, there's 1 million people, but are they really like putting money into the system? So that's why I always say there's context in that, right? Because before we had foreign buyers, we had wealthy people buying real estate. They were buying $3 million properties, and they're really still stimulating the economy. But then what happened was you had this outrage. You started to see real estate prices go up, and people started to blame foreign buyers,
right?
Which it wasn't the case. Foreign buyers equate to less than 5% of the total real estate transactions. But what happened was we had a really good market. We had a really good real estate market. So real estate prices started to go up. And people that got priced out of the market, they started to blame foreign buyers. But remember, foreign buyers at the time and even now, because there's so many regulations against foreign buyers. There's a foreign buyer's tax. There's a foreign buyer's holdback. There's so much. Even financing with foreign buyers is a nightmare.
Right.
So for somebody to come into this country to buy a property and just invest and take up all the supply, it's going to cost them a lot of capital in the first place. And for them to even think about it being worth it, they have to see some traditional upside, right? So what do they buy? They don't buy entry-level properties. They don't buy your $500,000 condos. They buy your $3, $4, $5 million mansions. So the fact that these people from China, from Iran, from Russia, and like all these wealthy people started buying these luxury products, yes, they were stimulating our economy, but they were not comparable to taking food off your plate.
Right.
But that's where the outrage was. So the government started to ban foreign investors, foreign buyers, all this stuff. And guess what? The real estate market was still strong at the time.
Right.
And the only reason why the real estate market started to go down is why? Is because the interest rates started to climb very, very rapidly.
Right.
But nobody talks about this. You don't hear this on the news. You never hear this.
Now, what was the reason for that?
Well, they started to say inflation was going up and all that stuff. I wonder why, right? I wonder how inflation went up, because inflation was already up
right.
during COVID, and we kept our interest rates very low at 0.25% with Bank of Canada. And the Bank of Canada was actually having a lot of pressure to increase interest rates, and they did not. And then what happened was they started to rapidly increase interest rates. I think it was like 10 times.
Right.
And that was the problem, right? So during COVID, our government started sprinkling free money to anybody and everybody. And that and experts said, do not do this because you're going to actually create inflation when you start giving free money out. Did they listen?
No, of course not.
Of course not, right? And we, the people, said, do not close up the economy. Let the economy run. Let it run. Did they listen? No. Because a lot of places on the east side, across the ocean, they were still operating like normal. And they had a full economy. Nothing was happening to their economy. And they were great, okay? But we locked up. We printed money. We gave people that deserved money or did not deserve, it doesn't matter, but we gave money out. And that started to ripple effect because the people that don't know how to manage their money started to spend money on luxury goods or waste their money. And the people that know how to manage their money that actually bought investments.
Right.
And then what happened was a lot of people were starting to use the COVID money as deposits for these pre-construction condos, which is just crazy. And so now all these developers and all these realtors started to get very excited because now, oh, wow, I got free money. I'm putting it as a deposit. If I buy this condo at $900,000 and it's going to close in 5 years or whatnot, I'm going to triple my money. You know, that's the thinking. And then guess what happened? Inflation hit. They started to increase interest rate rapidly. And then people couldn't close on these condos. People couldn't afford their mortgages. And then on top of that, the government introduced something called the stress test.
Right.
The stress test is basically, in a nutshell, if you want to buy a Honda Civic, your income needs to handle the payments of, let's call it a Mercedes-Benz. But you're still paying for a Honda. You're still buying a Honda. Your payments are still going to be a Honda. But you have to be able to afford the Mercedes. So what happened was when interest rates started to climb all the way to 7%, your income needed to qualify for an interest rate of 9%.
Right.
And that's what's crazy because imagine buying $1 million house or a $2 million house. For you to be able to qualify for that mortgage, your income has to be astronomically high, which most people couldn't afford that.
Now,
And that's on top of your property tax, that's on top of your utilities, that's on top of your car loan, on top of any other credit card debt or line of credit. And that's all factored in. So guess what happened? A lot of people bought properties and they couldn't qualify for their mortgages.
Right.
So they were actually forced to go into private financing or lose their deposits or lose their homes and get sued. And or all of the above.
Right.
And all of this was not necessary. All of this could have all been avoided without the stress test. Now, here's the thing: the devil's advocate is going to be the wealthy people are going to say, well, you know what? The stress test was great because it avoided us from getting a collapse. Those are the people that bought houses at $100,000 and now their house is worth $1 million or $2 million. They're sitting very cushy lives, right? So they're like, oh, well, my house didn't go down, and that's all they look at. But what you got to look at is if you're buying a property or if you're buying an item and that monthly payment will not change for 5 years.
Right.
Why are you stress testing? Let's put it to the average person. If you're paying for gas today and gas is $1, why are you forcing me to qualify at $3? Why does my income have to be able to afford $3 gas when I'm buying $1 gas?
So what is the answer to that question?
Well, they're trying. The answer was the reason why they put that is to protect the economy.
Right.
But what happened was they caused the meltdown because what happened was a lot of people that could qualify for the mortgage as it is were pushed out of the market.
It almost seems like that was the goal.
It kind of seems like it was, right?
Right.
Because if I could afford $5,000, why are you forcing me to afford $7,000? I could pay it. Right. And my rent is less than that. Right. Or whatnot, right? Or let's say $3,000. Like let's say my rent is $5,000 and I want to downsize. And my mortgage is going to be $3,000, but now I have to qualify at $5,000. Right. You see, but now you got to add my car, you got all that. Now I can't I can't buy a house now. So
Okay.
you're forcing me to rent, or you're forcing me to lose my opportunities, right? And I've seen a lot of people lose their life savings on this, and it's really sad,
Right.
you know? And they bought their property at when the rates were low and they could qualify.
Right.
Because a lot of people who are in a wealthy position that goes, well, maybe you shouldn't have bought this. You know, that's easy for you to say. A lot of people bought their property. They saved up their money. They had their income. They qualified when they bought it. By the time they went to close, the rules changed,
Right.
and now they don't qualify. And that is the issue that we're dealing with, right? So
that's a lot of the pre-built.
a lot of the pre-construction, a lot of it gets me very angry because a lot of this could have been prevented, right? And another thing that just boils my blood is back in the day, we used to have 40-year amortization, and amortization is how long you could stretch your mortgage, right? So you have 40 years to pay it off, right? And a long amortization is really good because your monthly obligation is lower.
Right.
So instead of paying $5,000, you're paying $3,000. The longer you stretch the loan. But our lovely government loves to protect us to say, well, you shouldn't be in debt for life, so we're going to shorten that
Right.
for you. For your benefit, we're going to say the longest loan you can get is 30 years.
Right.
So now we lost 10 years. But in the last 10 years, in the last 20 years, real estate prices have skyrocketed.
Right.
So now the property price has doubled or tripled, but we lost 10 years of amortization. So now our monthly payments are much higher. So the government that wants to protect us say, well, we don't want you to be in debt for life, but making your amortization shorter actually pushes you out of the property.
Right.
Actually makes you lose your home. I've seen many people lose their home because they can't qualify for the 30 years. But if the banks and if the government allowed them to stretch the amortization, yes, I can't afford a $5,000 payment because my income with my wife and all, we can't afford $5,000. You're going to put us out of a home. But we can't afford $3,000.
Right.
I don't mind you adding 10 or 20 years more to my mortgage. I don't care. I'm 50 years old. I'll pay till I'm 70.
Mm-hmm.
But if you force me at this amortization, I'm going to be out of a home.
Right.
And I'm going to be on the streets. And that's what happened to a lot of people.
That's crazy.
Yeah.
So now,
Sorry for my rant.
No,
but
it's okay, but
this shit just fires me up.
but it's important information. So now that we know how we got to where we're at, this is a big reason why I wanted to bring you in now versus release the one that we did, is because a lot has stayed the same, but a lot has changed. And you were able to use a pre-built construction condo that you bought on a credit card. So you talk about how to do it with other people's money and the importance of looking for the right investments and how to grow your wealth and how to use this one to fund that one. This is all part of the content that you've already put out.
Yep.
He's got a bunch of good stuff. And again, you can go to his website. Now, the big thing is, okay, so here we are. Let's walk through a couple scenarios.
Yep.
As far as qualifying for the mortgage, you went through all of the downfalls and how much harder it is now for that to happen. As somebody looking to purchase a first property and get a mortgage, what sort of debt ratios are they looking at, and what is the qualifier? So let's say I've never bought a home before. I don't know even where to start. How do I go about purchasing a home and getting the money to purchase a home? Can you walk me through, in today's Canadian real estate economy, what the best way to go about doing it is? Do I contact a real estate agent and go put in an offer on a place and then come see you? Or what? Walk me through beginning to end. Let's use a house worth $1 million, because that's pretty average in Toronto at this point. So if I'm going to try and do a $1 million house and I'm just your average Toronto citizen, maybe I'm married, joint income like $150K, trying to buy $1 million house, how do I do it in Canada, and is it possible?
Yeah, absolutely. So think of a triangle. You got 3 points, okay? So the top of the triangle is your income.
Okay.
And then you got the second a point, which is your credit and liabilities.
Right.
And then you have the third point, which is your down payment.
Right.
So let's start with the top, the income. That the reason why the banks need to find out what your income is and how you get paid, and that is a big context that a lot of people miss out. The reason why they need to know your income is because you're borrowing money. They want to make sure that you can actually handle the payments and pay them, right? Because they're not even using their own money. The banks are using other people's money.
Right.
They're like the kings of OPM.
Right.
Right. So they need to make sure you can handle the payment. So they want to look at what your salary is, or what your hourly wage is, how much you make in a year. That's the key thing. What is your annual income? Okay. And they're always going to go by gross income if you're an employee.
Right.
That's a very big context. And I say that because a lot of times people will say, well, Daniel, I make $100,000. Well, how do you make $100,000? Do you make $100,000 straight salary, or do you make $50,000 base salary plus commission plus overtime? And that's how you got, and plus bonus, right? That's how you got to 100. That's a very different way to underwrite a file, how a bank is going to view you. Because if you're $50,000 base salary and you haven't hit your bonus for 2 years, you only hit it last year, and you made 100,000. Well, the banks are going to actually look at your 2-year history to make sure that you're consistent.
Right.
So this is where I see a lot of people fall apart when they're trying to get financing, because they start a roll and then they hit a great bonus, but they didn't have it last year.
Right.
Okay. And they fall apart on that 2-year history. Another thing is, are you a business owner? Are you self-employed? So the banks are going to ask, what do you actually report to CRA?
Right.
And they're going to ask for a 2-year history over there too. So a lot of times business owners fall apart. This is where I specialize. My business is built around business owners. So a business owner, let's say a hairdresser, or a carpenter, roofer, mechanic, they make good money. A lot of times they're bringing in $500,000 to $1 million plus.
Commission sales guys as well. They fall
Commission,
into that category.
yeah. Realtors, they make good money.
Right.
But they got a lot of write-offs. They got a lot of overhead, and they don't want to pay a lot of taxes. I agree with them. So when they go to their accountant, they write off everything. So now you started with $500,000, or you started with $1 million of revenue, and then after all the write-offs, you're ending with $20,000, $50,000 net. So you're actually paying taxes on, let's call it 20 grand.
Right.
There's no way that a $20,000 net income can qualify for $1 million mortgage.
Right.
It's just not going to happen. But a lot of times people will look at how much they bring in revenue. They'll walk into their local bank, and then 99% of the time, the bankers don't know what they're doing, especially the ones in the branches.
Right.
And they'll get excited because they want to help you, because they're going by the number you tell them.
Right.
You are telling them you made $500,000 last year. You're telling them you made $1 million. So they're going to say, yeah, you're pre-approved. They're not going to check your documents because you don't have a real deal yet.
Right.
So then you're going to go buy a house and then find out 1 week before closing they can't do the deal. And everybody's going to be surprised, right? So if that ever happens to you guys, give me a shout, because I handle those stuff. So that's the income part. The credit part, they want to look at your credit history. So your score is between 300 to 900. The higher the score, the better. Okay. Right. And what they're looking at is your trustworthiness, how responsible you are. And the logic behind that is, if you're not able to handle a $10,000 credit card and you're missing the payments, you're going over the limit of your $10,000 credit card, there's no way that you're going to be trustworthy and responsible on $1 million.
Right.
If you can't handle 10 grand, you can't handle $1 million. That's what they're looking at. Then on that same spectrum, they're looking at any other liabilities you currently have. Do you have a car loan? How much is it? What's the payments? Do you have a line of credit? Do you have OSAP? Do you have another mortgage? So they want to know what your total debt is. Now we go to the right of the triangle, which is your down payment. How much of your own money are you going to put into this deal? Okay, you got to put some skin in the game. Okay, are you putting 5%? Are you putting 10, 15, 20, 35, 50%?
Now,
those are the
how does that get
most
determined?
popular. So it goes by the purchase price. So So if you're buying a $500,000 house, you put 5% down, that's 25 grand.
Right.
Okay. $500,000 house, you're putting 10%, that's 50 grand. Okay. You're putting 20% down, that's 100 grand. Okay. So you could buy a house with 5% down, but that means that you got to go with the banks. It has to be through the traditional banks. You could go through a mortgage broker to help you get that loan. And those are going to be insured.
I was going to say
They're going to be insured by CMHC, Sagen, or Canada Guarantee. There's 3 insurance companies that will insure the deal. And what that means is they're going to actually protect the bank. They don't protect you and your family. They're protecting the loan, and you're going to pay for it. What's the reason for that? Because you're putting less than 20% down. So you put less than 20%. If you're buying a $500,000 home and you're not putting 100 grand of your own money into it, that's fine. You could put 5%, which is 25 grand, but you're going to have to pay the insurance premium that protects the bank in case you can't pay this loan. The bank is just going to call up the insurance company and they're going to get paid in full.
Right.
Okay. That's what it is. So looking at that finance triangle, you just have to have all the right metrics to fit in the guidelines of the bank and also the government regulations. You asked me about the debt to income ratio. Normally it's going to be 39-44, but we can always stretch it up to 50. Let me explain what that means. So there's 2 numbers you have to look at. The first number is GDS, gross debt service ratio, or GDSR. It's just slang where we just leave the R out, but it's GDSR, gross debt service ratio. And what that means is we take your income and we divide it by your housing expense. That's the mortgage payment you're trying to qualify for, plus the maintenance fee if there's a condo fee, plus the property tax, and plus the utilities.
Right.
Okay. So that means that 39% of your income can go to housing, not more than that,
right,
technically.
Right.
Okay. Then there's the other calculation, TDSR or TDS, total debt service ratio. So that means we're going to take the previous number, which is the GDS number.
Yeah,
that's the housing component. And we're going to add on all the other debts that you have. And this is why I said the finance triangle is very important. If you ever get lost or you're talking to your bank or your mortgage broker and you don't know what they're talking about, picture a triangle, okay? And just go through income, credit, down payment, okay? And then you're going to know more than them.
Right.
So when you're looking at the total debt service ratio, you're taking the housing component plus all other debts. So if you have a car loan, OSAP, credit card, whatever, you're going to bundle all of those liabilities with your mortgage, your housing component, and no more than 44% of your income can go towards housing.
Right.
The total debt. Okay. Now, I say with an asterisk because with banks, we can actually stretch that number up to 50. But there's smaller lenders that cannot go past 44.
Right.
Okay. So it depends which lender you go to.
So it essentially eliminates a lot of options for the commission salespeople, the business owners, the people that live off tips, that sort of thing.
It eliminates a lot of those people.
Right.
Yeah. So that's why a lot of times we'll see a lot of people who are self-employed or commission sales and tip worker. They think that they can't buy a house.
Right.
They think that they're going to be renters for the rest of their lives or they have to live at home with mom and dad. That's not true. We helped a lot of people in those industries. There's different channels of financing, right? So we just talked about how do we qualify for a mortgage and what banks look for. When we go to the next layer, there's actually multiple channels of financing. There's an H side, there's a B side, and there's a C.
Did you say
channel.
H?
A, B, C.
All right.
A, B, C. 1, 2, 3.
Right. Can you kind of just walk us through what the difference is, just so that again, we're trying to leave people better than we found them. Obviously, if they do business with you, you get paid off of the business that you bring in and bring in the banks the money, and then you get them a house, which in turn, if they are smart and they listen to you and actually take the time to take advantage of the guidance and the coaching that you give people, One of the things that I love about you is like I've been there for conversations, never for personal conversations where you would expose information about the clients, but I've heard you have conversations like while we're getting ready for the podcast, somebody doing a deal with somebody else called you and you still gave them the information despite the fact that they're giving somebody else the business. But I've also been there when you've got phone calls from people that were giving other people the business that couldn't get the deal done at the last hour and now had to spend like an outrageous amount on fees so that they could get things done in time. But again, that's your specialty. So why don't you do us a favor and walk us through, like, if we're trying to do this and we're a business owner, or if we are trying to do this and we're a homeowner, or if we're trying to do this and we have bad credit, or if we are a current homeowner and we owe money on taxes and are trying to either buy another property or refinance our property, can you walk us through a couple scenarios and like how a mortgage broker differs from a major bank? Like you can go into RBC or Scotia or CIBC, any of these major branches, and potentially get a mortgage and get better rates, which is everybody's main focus. But you used a credit card to amass, 5 now properties? So 4 properties, 5 properties, however many that you've attained over it. You did it using a credit card at 29% or whatever the interest rate was 5 years ago. So you've done it. You've shown what's possible. You were a commission guy when you did it.
Still a commission guy.
Right. So you've been able to do it successfully through all of these changes and use this to do that and help other people use this to do that. So can you walk us through the difference with a brokerage and why you should use a broker versus a bank, when you should use a bank versus a broker like yourself? Because I know an honest guy like you is going to actually answer truthfully. So if you could walk us through.
Yeah, absolutely. So you asked me what's the difference between a broker versus the bank, and then what is the 3 channels of financing?
No, sir. I asked you 6 questions.
Okay. Yeah.
So start at the top. What's the difference of a bank versus a brokerage?
Absolutely. Okay. So if you're trying to work with a bank, you're actually losing this argument already, because you're most likely trying to borrow your money for the first time for your first home. Right? Most people are first-time home buyers.
Okay.
A lot of people are first-time buyers, right? Like if you're buying a property, because not a lot of people want to get into investing. They're scared of that, right? So a lot of home buyers are first-time home buyers. So this is going to be your first time trying to qualify and negotiate a $400,000, a $800,000, $1 million from a bank.
Right.
Whereas the bank does this every day, right? And they control it. So the control is already on their side, right? The leverage is on there. So you don't know what the rates are. You don't know what the process is. You're going in blind all by yourself, and you're trusting your local bank because you got your checking account there. You got your credit card, okay? Sometimes it works good. Sometimes it doesn't, right? Many times it doesn't. Now, and they only got one product. So if you're working with RBC, you're working with RBC, BMO, TD, Scotia, right? So you're always going to them directly and only to them. And if you want to shop around, you have to go into different branches.
Right.
They're open from 9:30 till 4. So especially if you're working a 9-to-5 job, it's very hard to get into the bank as well.
Right.
So that's one of the drawbacks of working with the bank. Working with a broker is we have access to multiple lenders. So we could work with Scotia, they're one of our partners, TD, BMO. We have access to other lenders you never heard of, but they're very big in our broker channel that probably give you better rates than what your local bank will give you. And the reason why they give you better rates is because they don't actually have a physical branch. So all the money that they save by not having a physical branch, they pass the savings to you as a consumer. Did you know that? Now you know. Right? So working with a broker, we do this every day.
Right.
And we work on behalf of the consumer.
Right.
And we've done all these transactions. We know exactly what documents they're going to ask us for. We know what the process is, and we're going to help you hold your hand from A to Z. Whereas when you're working with the bank directly, you're waiting on their guidance, okay? Now, also, we get instant response because we're dealing with millions of dollars, multiple files with these banks, and they are our business partners.
Right.
So it's way quicker for me to get an answer on your file than you are.
Definitely.
Yeah, because we're dealing with millions of dollars, right? You're not the only client. So I got underwriters responding to me on WhatsApp on a Saturday or a Sunday. You're not going to get your banker getting that. I got my bank partners responding to me on Christmas, on New Year's, on holidays, when they're on vacation. You're not going to get that as a consumer. Like, it's 9 to 5. It is what it is. You're done. And if you can't get through, and here's how you guys test it. Just Google your own branch. Just Google your branch. Find the phone number of your branch and try to get a hold of somebody. Anybody. Try to get a hold of an advisor.
Mm-hmm.
It's going to take you almost a day or 2 days or maybe even a week.
Sometimes, yeah.
Yep, sometimes more. So we've had multiple clients that went to the bank direct. 3 months, couldn't get a deal approved. I don't know why. 3 months. And then they came to me. I got it approved on the same day at their same local bank, at the same branch.
Jeez.
And they're like, how is this possible? You don't even work for the bank.
Right.
And I'm like, that's the difference.
Yeah,
This is the difference. We
don't
have
work
that
for
connection.
the bank. You work with the bank.
Exactly, because we're
Right.
partners with the bank. We actually go golfing with the bank,
Right.
right? Whereas you are on your own, right? So now how do I get paid? Well, the banks actually pay us a commission.
Right.
So 90% of these files that we do with the banks, we don't even charge because the banks pay us.
Right.
Okay. So you're going to get our level of expertise, our level of service, and you don't pay anything because the banks pay us. Right. Now, that doesn't affect your mortgage rate because the banks are saving money.
Right.
They don't need to hire an employee for your file.
Right.
Because they're getting a guaranteed file from us. We're investing in our time and our money, and we're handing the deal to the bank. And we already know this deal is going to go through, or else we're not even going to send it to the bank. So they're getting a free deal. They underwrite it. They pay us. So that means that they don't need to worry about their $100,000 salaried employee, worry about their CPP, their taxes, lawsuits on their employee. They don't have to worry about overtime on their employee. That's where the bank saves money.
Mm-hmm.
And they just pay us a commission and they take care of it. And this is why it does not affect your rate to work with a broker.
Right. Now, that being said, if you're going with like a B or a C lender based on either credit or lifestyle or type of employment, that sort of stuff, then there might be some extra fees associated with it if you can't get your deal done and you have to get it done in a week versus having 3 months till closing.
Yeah.
Like those types of things I know are going to probably cost you more, I would assume. There's some level of inconvenience to having.
Those are most of my files. Like I do a lot of no charge files, like I call them the oil changes, like your lowest rate first time home buyers. Husband and wife got good income. They're getting money from mom and dad. They got good credit. They don't have debt. Those are my oil changes, which, I don't have to charge you a fee. I get paid from the bank. I give you good advice. You buy your house. You're on your way.
Yes. But
my specialty, where I built my name, is the problem files.
Right.
Yeah, those are the ones that, like it's I have a passion for it.
Right.
I've closed deals in alleyways. I've closed deals on the side of a highway. I've closed deals in a washroom of a restaurant. I've closed deals in a concert, like a heavy metal concert. I've closed deals everywhere, like on the beach, in an airport terminal in Taiwan, in Hong Kong airport, on the tarmac of anywhere in the world. I've dealt business, and those are my fun deals because they're crazy deals. Those are charge deals because there's always something going wrong. They probably came to me first. I told them, you know what? You guys are retired. Don't buy this house. You don't need to do it. You're not going to fit the metrics. And clients don't like me saying that. So then they go to somebody who promises something else. And then they buy $1 million house they can't afford or they don't qualify with the rules. And then they're on the hook because they put $100,000 deposit. They're going to lose $100,000 and get sued if they don't close. Then they come back to me.
Right.
Now it's a different story
Right.
because I didn't pre-approve you to buy this property.
Right.
But then you went ahead and did it anyways. So now you're coming back to me. Now I'm saving your deal now. That's a different file now, right? So those are charge files because now there's a lot more complexities. So we handle that. That's what keeps me in the business. Like,
Right.
yeah, those are the fun files. Yeah.
Quote unquote fun files. But
Sometimes they're nightmares. Like it's
when they go through, they bet they feel good though.
I've actually closed a deal when I was at the Bank of Canada in Ottawa, in the Bank of Canada Museum. It was so funny. I was right by the washroom. There's a security guard with a bulletproof vest with a handgun on the side, just walking back and forth, pacing. And I had literally like 4 files. And I'm just going through with my laptop and on the phone. I was talking to the banks, trying to get this deal through. Because when we're dealing with these high risk deals or these like problematic deals, anything can always go either way, right? So it's my job to piece together. It's almost like you're going to court and I'm your lawyer. I'm your criminal defense. Like you have this problem here and you got to solve this problem. It's my job to take all the facts and package it together and sell it to the lender with the money of why they should take on your case and lend you the money, why they should lend you the $1 million and save you from a lawsuit, right? That's my job.
Right.
So I really enjoy that because that's where I come up with packaging the files and calling the appraisers and calling the lawyers and creating the file. This is called creating. This is where the mortgage brokering job becomes an art. Because not a lot of people know that, right? Like a lot of people will just look at the GDS, TDS that we just spoke of. Oh, well, your income, your credit, right? Like it's very easy to fit in that box. But once you start getting to the harder files, it becomes an art because you also have to know how to talk to people.
Right.
You also have to know what documents to expose and what not to expose because depending on some documents that you pass on to the lenders, that's going to kill your file.
Okay.
Right? Because there's you only give the lenders what they ask for, and that's it.
Right.
You don't overshare stuff, right?
And as the broker, you don't want to be giving them bad deals. Otherwise, they lose confidence in you.
100%. It's a relationship because like the reason why people pick up my phone calls is because I give them good deals and my clients don't default.
Right. And you're actually structuring the deal before everything happens versus...
And I'm giving them a full package and my deals are not fraudulent.
Right.
Yeah. And this is how I actually closed a few of my deals where one of my lenders, it's a bank. It's funny. Bank was giving me a hard time on a file. Everything matched, everything checked out. But for some reason, they were just giving me a hard time on this one specific file. And and we were going back and forth for 3 days. And I just let them have it. I said, guys, how many years have I been doing business with you? How many deals have my clients gone bad? How many of my deals have gone bad? And I say, guys, I'm sending you legitimate clients, legitimate documents where there's guys out there sending you fraudulent stuff. You know it, I know it. And not one file of mine has been fraudulent in the last 12 years. Not one file has gone bad. And you guys are giving these clients a hard time? This guy works for the government of Canada. This guy works for is a teacher or whatever. They have 800 credit score. Do you want the file or do you not want the file? Should I just go to your competitor? Let me call you back. And in 30 seconds, I got the approval.
Right. Yeah, leveraging your experience with it and your track record. Now
But you're not going to get that if you're trying to go direct sometimes.
Right.
Because now you don't have the leverage. Because now I can go back on my track record.
Well, not everybody has the same track record as you do, and not everybody vets their deals the same way. More like one of the things that I run into in the window business a lot, and like I try and do the same thing when I'm in the house, because at the end of this thing, my goal is help as many people as possible, not sell as much stuff as possible, but by having a bigger mission, you do more deals. Like it just works out that way. When you set out to educate, not pound home a deal and make it happen on the spot, which is what I find most guys are doing. Like they'll show up grouchy just because of the fact that they haven't been able to close deals, but we're eating their lunch because we're showing up, we're giving them information on how to do it interest free, we're showing them how to get all of the windows instead of just the 3 things that they called us for with less out of their pocket, how to increase the value of their home and not have to pay out of pocket, how to make it so that the expense pays for itself and increases the value instantly without the cash out of pocket. There's so many different things that we're bringing to the table that nobody else is bringing to the table, and that's why we're the top company every single year. But what is the one thing that people should look out for when choosing a broker? Like, obviously, they should pick you. Are you licensed to do business in more than just Ontario? Can they call you if they're outside of Ontario?
Yeah, they can call me outside of Ontario. I'm licensed in Ontario, but we can always co-broker files. Right. So I'm closing a few files in Alberta next week. Nice. Right. So we have a channel that we submitted to. I handle everything. Everything's legitimate. So I'm front facing. And then what we do is we back end license it with a partner, and then we use their Alberta license to close it. So everything is on board.
So you could do it in any province. It doesn't have to be just
I've
Alberta.
Closed deals in BC, Alberta, New Brunswick, Quebec. I tend to stay away from Quebec right now.
Oh, why is that?
It's just a different. It's not even. It's a different country altogether. Like their rules are all. Yeah, it's a nightmare. It's a nightmare.
Now, is that the same with the?
Sorry for anybody who lives in Quebec. But anybody who lives in Quebec, you know exactly what I'm talking about. Right. You know what I'm talking about. Yeah.
It's pretty obvious as soon as you go to try and do anything.
Yeah, I don't want anybody from Quebec to get offended. All these Montrealers,
right?
They know what. If you're from Montreal, you've dealt with like Toronto rules and Montreal rules. You're like, whoa, why are these upside down? Why are they backwards?
Now, let me ask you the same question. Like, what should they be looking for when they're trying to get a broker? Like, how do you tell if it's a good broker to use, a legitimate broker? Like, what?
Well, first of all, look them up.
Okay.
It's very easy. Like, if your broker doesn't have an online social media, like it's 2025 right now. Like they should have a LinkedIn profile. They should have a Facebook. They should have an Instagram, maybe a website. Like they should be searchable, right?
Okay.
Like before you even dive deep, like do they exist? Okay. That's number one. Do they exist? And then number two, you could see if they have a website, you could see how many Google reviews they have, right? I think I have like 113 or whatever. And whatever you see online on Google reviews, if they have 100 or 200 or 500 or 1,000, probably add 20 or 30%.
Right.
Because a lot of times, a lot of clients, like they're just, I don't know, they just don't give Google reviews, even if you save their home or, you know, like you do a good job. And for whatever reason, it might be to save face, because like if somebody was about to lose their house and you save their house, like they don't know how to really thank you for that, because it might be embarrassing for them. So that's why like they might say thank you by email or phone you.
Yep.
Or buy you a bottle of wine, but they're not going to put it publicly, right? So if you see like a brokerage that has 100 or 200, whatever, just add 20, 30%. They've closed way more. They have way more success, but that's already a good sign. Okay?
Yeah, look for the negative ones, and it's way harder to get a good review than it is to get a
100%.
Bad review. If you can find out of that 100 reviews that there's 10 bad ones, that means that 10% of the time at least things go sideways and that there's issues.
Yeah.
Like one of the top-rated window companies, for instance, last year they were the most efficient window. This year they got declassified from Energy Star. So last year it was the most efficient. This year it doesn't qualify. Nothing changed, but now they had to change everything and produce the window differently just to qualify for minimum Energy Star. Because if you don't know what the numbers mean and the numbers change, just like with the stress test, all of a sudden you couldn't get the qualifications anymore. And if you did a deal with that company at the time and you were trying to take advantage of the interest-free government loan that's going on up to $40,000 interest-free, no lien against your house, all of a sudden the windows go in and you no longer qualify for that loan. So you just got $30,000 worth of windows that were supposed to be interest-free, highest efficiency, and now you're stuck with a scenario where you have to pay it out of pocket or a higher interest loan in order for you to qualify. So one of the things I always show people, like last year, Homestars was where everything got sent reviews-wise. So We did 5,000 installs in 3 years. We got like 4 complaints, period, online. You can look at any of the review sites, and then it's very hard to keep the reviews that low in the negative when your volume is that high. But all of our resources were sent towards getting reviews on Homestars, and then they changed what Homestars was. At the blink of an eye, it no longer was a review site. It was now a pay-to-advertise site, where you had to become a member just to leave a review. And if you became a member and said that you bought Windows, they would now bombard you with window company ads that were part of Homestars. Oh. So because we spent so long sending all of our reviews to Google, we only have 400 reviews on Google, but we had 400 other reviews on Homestars. We had almost 1,000 reviews, but if you go to either one of those sites, you're going to get a different perspective. So check multiple sources when it comes to the reviews. Look for the negatives first. Check Better Business Bureau as well is one of the things I'll say.
Most people won't go through that.
I know they won't.
And you don't need to, right? Finding a mortgage broker is very simple. Just Google, do they have a website? Do they have an online presence? Do they have Google reviews? That's like the bare minimum. And here's why. Because you're going to eliminate all the part-timers. Mm-hmm. You're going to eliminate all the new mortgage agents. Because if you just got your license like last month, you're not going to have a website. You're not going to have social media. And how much social media content is there? You're not going to have any of that. Or your agent will not have that, right? Your agent will not have Google reviews. So that's how you're going to eliminate all the newer agents, okay? And then you can look online to FSRA, which is our governing body, and see if there's any industry complaints. And that's it.
Right.
And if somebody has a good presence, good Google reviews, and they look like they're an active broker, they're going to do a good job for the most part.
Right. Any questions that they should ask when they're doing the vetting, or anything that you could do to help arm our listeners with the most information to get the best experience from?
Well, your personalities have to jive, right? If somebody calls me up and says, Daniel, what's your lowest rate? Already, you're probably not my client. Now, even though I'm going to get you the best rate you qualify for, but if that's how you're going to start the conversation and start the relationship, I kind of distance myself for those guys. I'm like, hold on a second. You're asking me what's my lowest price. So now I got to see, are you the right client for me?
Right.
Right? 'Cause imagine, let's say you're in an alleyway. There was a big fight, and now you got arrested. All right, and now you got to hire a lawyer because you were just in the wrong place at the wrong time. Are you gonna look for a lawyer for if you're guilty, you're gonna spend 10 years in jail?
Right.
Are you gonna just Google criminal defense lawyer, cheapest criminal defense lawyer? You're not. You're gonna say best criminal defense lawyer.
Right.
To get your butt out of jail. Right. So if you go to a lawyer and be like, hey, what's your lowest price? They're like, I don't know. How much do you value not being in jail? Right. Right? So for mortgages, it's different because it's a very logical product, right? People buy properties emotionally and they justify it with us, the finance, because it's very easy for you to go inside a realtor's Mercedes-Benz, drive around nice neighborhoods. You told the realtor that your budget's $1 million, and then they go, just for fun, let's drive around the $2 million places. Let's drive around the 1.5. And then they go, can you up your budget? Oh man, let me see. Now you really see the difference between $1 million house that's in your budget versus a 1.5 and a 2 million. And it's very easy for a realtor to say, you know what? I really see this is the house for you. And automatically, just like that, your budget increased by $500,000. But now you buy it, you're stuck on it. Now you got to finance it. Now all the logic comes in. Oh, well, I need the lowest rate because $5,000 a month is too much. Well, it wouldn't be $5,000 if you just stuck under your budget.
Right.
Right? You brought it up $500,000, not me.
Right.
Right? So, but now they try to penalize me on doing a good job and cutting my commission, cutting my fees and all that, provide the same amount of service, but they just increased their realtor's commission for a $500,000 deal for doing nothing different.
Yeah.
But at the end of the day, I'm the guy who has to get you the financing because your criteria changed.
Right.
You went from being a pre-approved for $1 million. Now you went up $500,000. Now I got to see if you still qualify. Now I got to do all this magic work, right?
Mm-hmm.
So this is why I tell people, don't focus on the rate. How you find the right people to work with on this is, do you jive? Are you guys looking at the long term? Because you want someone who knows what they're doing, who can get you to the finish line, who's actually working for you on your side and can help you on your long-term goals. Because I focus a lot with investors. I help investors flip properties, do Airbnbs, help them buy long-term rentals. You're not going to get that with your local bank. Right. And you're not going to get that from an entry-level mortgage agent. It's just not going to happen because they don't know how to stack their files together. They don't know how to double calculate the files to see if you qualify. Like, they just don't know how to do that. And they don't know which lenders to go to if you're going to keep your owner occupied house and then buy another rental, or how to structure that file. They will not. Their only weapon at a bank is, we're going to get you a lower rate. That's it. So what's a lower rate? You might save $30 a month? But if I can help you make another $3,000 a month, like helping you buy a rental property or whatnot, like if you want to flip properties, I can help you acquire your next flip and you're going to profit $200,000-$300,000. Isn't that worth more than saving you $30 a month?
Right.
I could probably match that, whatever the bank's giving. But the difference is, I don't like to compete on that. I like to compete that you're going to have a very smooth closing and you're going to know exactly where your deal is every step of the way. I have full communication with the client. I have full communication with the realtor. I have full communication with the lawyer. Anytime my clients work with my team, it's a smooth closing. Anytime a client tries to do their own stuff,
right.
we always hit bottlenecks, and the bottlenecks are never on my side. It's always they're hiring the cheapest lawyer, and the lawyer doesn't even know there's a closing on file, or like just craziness. The craziest thing that you can think of, it happens.
Can you actually talk about that? Because I sent an article, and we got to get into our actual weekly meeting, so we're going to have to cut this thing off here. I would like to invite you to come back anytime to record another podcast. You can be a welcome guest anytime you want to come in, because every time we talk to each other, I learn more. It's going to help more people. Obviously, with me now becoming a mortgage agent under you, it's beneficial for our business for you to come back in and help educate people. We can reproduce the content just like you were talking about. It's important to have social media presence, and I know that you've spent a lot more time building your own brokerage and bringing in people that will help you take care of your customers versus just trying to grow a big brokerage, which is one of the reasons why I identify so well with you, and one of the things that has kept you as one of my best friends over the last few years, despite the fact that we're new friends, 5-6 years ago at this point. I want to ask you just one last question. For anybody who's looking to get a mortgage, looking to buy another property, has an existing mortgage, needs to refinance, I know you offer so many services that they could use. What is the best way for these people to look you up, and what's the best way for them to book a call with you?
Yeah, absolutely. You can look me up at danielchar.com, Daniel, and then char.com. That's my personal site. And then we also have our brokerage site, which is METALMORTGAGE.CA. Metal, METAL, mortgage.ca.
Well, thank you so much for coming in and being part of the podcast, and again, for letting me be part of your team and being such a good friend and always providing the value first. It's one of my favorite things about you as a person and as a business guy, because what you see is what you get. There's no BS, and he will try and help you through the BS before he tries to get your money, which is an important piece. look for people like that. Again, our mission here is to leave you better than we found you. There's definitely enough information to help you if you're looking to be part of the real estate market and wondering why you keep getting screwed every time it's time to remortgage, or why you need to remortgage every year or 3 years or whatever. One of my favorite things that you say is make your money, or your money comes from the profits and not from your pockets. And I know that you're trying to create that scenario for everyone that comes through your door, which is amazing. So again, that's METALMORTGAGE.CA or DanielChar. Awesome. And if you need anything, you can click the links below. We're going to try and make that easy for you to access. Also, if you've made it this far, and the credits, we're going to roll the Daniel Char Power Broker tune that I made for you, like 3-4 years ago. It's a banger. We're going to start putting that out on the podcast for sure. Check it out. Hope you guys like it. And in the meantime, try and leave people better than you found them. Be the light you want to see. Make the difference in somebody's world, even if it's just leaving with a smile or a helpful piece of information. Until next time, thanks for tuning in.
Awesome.
Let's go.
Maybe you've been rejected or got less than expected. You need cash for your biggest investment. We've got investing perfect. You need the power broker.
Daniel Char, the power broker. Pay off your car or renew your mortgage while everyone's got their eyes on shortage. He's talking strategy and he's real supportive. Learn how to buy a home with no money down. Catch him on the screen shooting money round. Never lose a deal, that's a heartbeat method. Buy a condo, pay $270 all on credit.
And you know he's gonna get you done. When it comes to funds, he's number one. And no matter what the rate is, it's not what you pay, it's what you make it.
Cause a higher rate with the mind state that it's not what I pay, it's what I make. At the end of the day, I'll make more than my bank, then do it again. Now that's how I face the opportunity. Now why would I blink when he could fund it all, including my sink? Daniel Char making money fun with the money gun. Talking money, son. He's the nicest guy, he can get you funds. If you want a home, he can get you one. If you have a dream, he can help you run. Talking strategy will get your money up. You'll be making money while you counting sheep. Why would you use your cash when the money's cheap? Use a mortgage broker who can get you more. Help you plan ahead so you can make a score.
Maybe you've been rejected or got less than expected. You need cash for your biggest investment. We've got investing perfected. You need a power broker.
You need a power broker.
Why would you use anybody
You
else?
need a power broker.
This guy's gonna get you the money you need.
You need a power broker.
You've got investing perfected. You're the power broker.
You need the power broker.
Why would you use anybody else?
You need the power broker.
This guy's gonna get you the money you need. Yeah, you know.
We've got investing perfected.
Metal Mortgage.